Well, I think the big risk actually is places like Indonesia and Philippines. I mean, firstly, Philippines, for example, is not a very liquid market, and so any small move can have a big impact there. But if you see what's going on underlying in those economies, and India included, is that inflation is picking up, and you're starting to see more, with elections coming up next year, more kind of moves to alleviate some of the consumption story because it's been under pressure, oil prices are going up. So I think inflation is still yet to pick up, but some of these concessions being made to the electorate before the elections is a little bit worrying. I think the fiscal discipline is really being lost in these places, especially in India.
So the concern right now with India is fiscal slippage as opposed to fiscal consolidation, and that could lead to outflows.
Yeah, that's a serious concern about India. I think if you think about oil prices going up, they're one of the most susceptible countries in terms of that move. I think the current account deficit may be worse than we expect, and certainly Indonesia, I think that's a possibility as well. And again, in Philippines as well. So I think all of those countries are really to be avoided for now. And where we see a bit more attractive valuations or a bit more momentum in terms of dividends and earnings and so on is actually Singapore and Malaysia within the ASEAN context.
Hadley.
Sat, it's Hadley out here in Abu Dhabi. I just wanted to follow on to some of the things that we heard of just a moment ago from Emily. Of course, the U.S. Treasury Department taking on Huawei potentially there in terms of U.S. sanctions on Iran. I want to get your take on the potential for other such instances when we look at what's valuable and what's interesting in Asia for you guys, because at the end of the day, the U.S. Treasury Department isn't playing around, and this is the second story we've heard like this one in recent weeks.
Well, don't expect this to finish anytime soon, because ultimately, you've got this trade negotiation going on, and surprise, surprise, we've got all of these things coming up. So I think it's a good leverage tool for the US when they go into negotiations with China. But also, I mean, China needs the US as well. So, I mean, they need to lean on some of this US technology as well. And there, for example, semiconductors is not so well developed in China. It's something that they can't domestically generate. And I think if you put that all together, it makes for a very interesting trade negotiation, which I'm not sure will yield anything for now, but it's a starting point for that. And I think there'll be more of this noise continuing over the next few weeks and months.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.